What is going on, people? It's Matt from Liquid Loans, and in this video, we're going to find out how 0% interest borrowing works in the Liquid Loans protocol. Let's go. Have you ever seen a TV ad offering 24 months interest-free on white goods or furniture? If so, you may have wondered, what happens if you haven't finished off paying the loan at the end of the 24 months? The answer is you start paying interest at a really high rate. In the CFI world too, debt through loans and mortgages come with high rates straight off the bat. And up until now, we've had to take it square on the chin with no other options. But what if there was a way that you could pay 0% interest with no repayment schedule, essentially never having to pay back your loan if you didn't want to? Well, how could that be possible? Well, that's exactly what Liquid Loans will allow you to do. Interest rates on borrowing from the bank seem to be getting worse and worse. So it's no wonder why people can't wrap their heads around having 0% interest on a DeFi loan when they first hear about it. So here's how it works. Once deployed, the Liquid Loan smart contract will essentially just be a piece of immutable code that lives on the blockchain. There's no office space to pay for, no electricity costs, no staff to keep it running, and definitely no backhanders to dodgy bankers. Just unchangeable, unswitch-offable code on the internet. This is true DeFi at its best, built by the community, for the community. With Liquid Loans, when you choose to mint USDL stablecoin against your Pulse, you and you alone are performing that operation, with the understanding that if your vault level ever slips under 110% collateral ratio, you risk losing your Pulse. Although Liquid Loans has a low 110% minimum collateralization ratio, it is recommended that users set a high collateralization level to stay away from possible liquidation and therefore always hold on to their assets. For example, here are some numbers. A collateral ratio of 500% would have to see the market retrace by 78% before being up for liquidation. A vault with a collateral ratio of 1000% would have to see the market drop by up to 89% before being in risky waters. Thanks to some clever code, our algorithmic stablecoin USDL is always redeemable for $1 worth of Pulse. So if the price of Pulse is 10 cents, 1 USDL will be redeemable for 10 Pulse. If the price of Pulse is $10, then 1 USDL will be redeemable for 0.1 Pulse. This helps to ensure that the system remains solvent at all times. Unlike the CFI sector, which is fractionally reserved, the Liquid Loans protocol is the complete opposite and always has more collateral than debt in the system. With Liquid Loans, all the stability and liquidity in the protocol is provided by the users. In order to incentivize people to provide stability and liquidity, there are healthy rewards for taking part. To be a stability provider, all you need to do is to add USDL to the stability pool, and you'll receive rewards in Pulse from liquidations and the loan token as well. To get your hands on USDL in the first place, you simply mint it by collateralizing your Pulse or buy USDL on the open market. Loan is the native token in the Liquid Loans protocol. It exists in order to provide stability providers with enough incentive to provide that stability. But that's not to say it's not a significant earner in its own right. Stability providers can of course sell the loan token they receive if they want to, or they can stake it in the staking pool, and the loan stakers earn a pro rata share of the system's borrowing and redemption fees in USDL and Pulse, proportional to their size in the staking pool. So if you're a borrower, a stability provider, and a loan staker, you're using the system like a boss. So, to sum it up, Liquid Loans offers interest-free borrowing because it's just clever, immutable code on the blockchain. The users provide stability and are incentivized for doing so with rewards in Pulse and the loan token that can earn more Pulse and USDL when staked in the staking pool. A beautiful cycle of DeFi artistry, if I may say so myself. So I hope that video helped you understand how 0% interest is feasible in DeFi and the Liquid Loans protocol. If you like the video, guys, do hit that subscribe button and that bell icon so you're notified every time we drop new videos and content. Also, share the video with someone who you think it may benefit. You can also gently tap that like button, and if you're feeling really kind, drop us a comment below. It helps us with the algo. Thanks for watching, and I'll see you on the next one.